CPI is on deck for tomorrow at 8:30 a.m. Eastern time. I'll be live for that. And I want to give you guys a preview of what I think is actually the expectation versus reality and what the Fed plans to do beyond that. But let's back up a second and let me explain how we got here. The SVB saga is still front and center as far as everybody's attention at the moment. And that is a clear sign that something broke based off of what the Fed actually did. Let me explain. The SVB saga, the reason that we saw all of that take place was because of how levered they were in U.S. Treasuries. As interest rates continued to go up at a very fast pace, those Treasuries became less and less valuable, and then SVB ended up becoming insolvent, and they weren't able to pay their depositors on a huge bank run. 25% of the depositors wanted their money back, which ultimately led to this situation. And realistically speaking, if 25% of depositors pulled their money from any bank, it would be troublesome. But in this case, it was more or less of a perfect storm, a lot of mismanagement going on, and that's a situation that we got ourselves in. But the fact remains that this wouldn't have happened if we hadn't seen such a huge rate increase from the Fed. This was more or less of a domino falling or something breaking as a result of raising rates that created a ripple effect, not just from a banking perspective, but also from a small business and startup business perspective as well. That is what ultimately got impacted here. And so that's why the government had to step in. Now, the Fed has decisions to make. I think, in my opinion, that 50 basis points next week is off the table. So what happens now with the 25 basis points? We could see something certainly take place here, and it all relies on CPI. CPI is expected to come in at 6% year over year, which is still very high, a 0.4% increase month over month. And those expectations are starting to loudly are expected to come in higher. Now, we'll see if that actually takes place. But what if it doesn't? If it comes in lower than expected from economists, I think that a pause from the Fed could actually be very, very likely. And if that happens, if CPI comes in lower than expected tomorrow at 8:30 a.m. Eastern time, which, by the way, I will be live for, so make sure you're tuning in, hit that notification bell to get notified when I go live to react to CPI tomorrow. Well, I think that this is going to be something that we really need to consider a huge market move to the upside. If CPI comes in lower, that means that the Fed, in my opinion, is going to be forced to halt rate increases. They're already starting to see the effects of this with the SVB drama, with what's going on as a result of layoffs taking place. And now we are seeing inflation come down if CPI comes in lower than expected. So if that takes place, the market has a chance to really rally here. And I wanted you to take a look here at this chart. This is the weekly SPY chart. And I told you guys, for those of you who have been a part of the channel for a while, that this would have really concerned me if we saw the weekly chart break below the 50-week moving average and then also break below the trend here that I have marked. So this trend here, this is what's got me nervous. Now, this green candle right here is just today. It's Monday. This right here was all last week, obviously super rough as a result of the Silicon Valley Bank. If we see a move back up into here, then I'm going to start to feel a little bit better, especially if CPI comes in below expectations. And my bullish stance, my bullish theory of that 15 to 20% performance from the S&P 500 this year will still remain intact. But if CPI comes in higher than expected, then I think this is going to create more fear in the markets, and we can continue to see things come down, and the banks certainly will continue to suffer as a result. But let me know what you guys think about this. Is CPI going to come in higher or lower than expected? And is the Fed going to be forced to stop everything that they're doing, take a look around, and assess what's going on in the economy? Let me know what you guys think about this. And of course, make sure you're hitting that subscribe button, that notification bell, and join me tomorrow at 8:30 a.m. Eastern time when we'll be reacting to CPI numbers in real time. Thanks, guys, so much. Love you all. I'll see you tomorrow.